Good afternoon, East Coast, and good morning, West Coast, as well as a hearty welcome to all of our attendees from around the world. Today's roundtable discussion promises to unveil the secrets behind one of the most dynamic forces in today's financial landscape, the data driving private equity investment. My name is Craig Cook, and I'll serve as your host for this insightful session. I'm honored to lead this powerhouse panel of experts, each bringing a unique perspective to the table. First up, I'm proud to introduce my boss, David Smooha, the CEO of Business Solution Partners, a software consultancy and development firm whose practice is focused on the NetSuite ERP. David began his career as a CPA with Deloitte before opening his practice just over 35 years ago. An early adopter of cloud technologies, David led BSP to become one of the first NetSuite solution provider partners and has amassed an astounding 35 years of technical systems and financial process expertise. Under David's leadership, BSP recently took on their first round of private equity investment with the team at Columbia River Partners. Speaking of CRP, also joining us today is founding partner Nathan Chandrasekaran. Nathan has been in private equity and finance for over 15 years. Prior to starting CRP, Nathan spent more than 10 years at a New York-based middle-market private equity firm with $1.5 billion of assets under management. A boutique firm, CRP's private equity investments are laser-focused on confluent technology solutions. Nathan's insights into the intricacies of investment strategy will undoubtedly shed light on how data drives success. And completing our panel is Alan Chaffee, CEO of Turning Point Strategic Advisors, a beacon in the financial and CFO advisory services arena. Turning Point is also renowned for its high-level talent placement in executive finance roles. Alan's expertise bridges the worlds of financial excellence and progressive leadership. Turning Point's mission is to improve the lives of their clients and community by helping businesses achieve their greatest potential. They do this by listening intently, creating financial clarity, and inspiring management accountability, the conditions needed for businesses to thrive. So for the next hour, we're going to delve deep into the realm of private equity, where data meets dollars. We'll explore the key performance indicators, financial metrics, and operational insights that underpin every strategic investment decision. Together, we'll uncover the strategies and technologies driving private equity investment to new heights. All right, so without further ado, let's embark on this enlightening journey through the world of private equity and data. At this time, I'm going to invite our panelists to turn on their video and microphone, and I'll ask each of you to provide a short introduction. How about we go in reverse order from my earlier introductions, and let's start with Alan. Alan, would you like to introduce yourself and help orient our audience with a brief introduction?
Hi, Alan Chaffee. I am a CPA by training, worked in the big firms in the late 80s, early 90s, founded Turning Point in 2009 with the mission of bringing high-level CFO ability to the middle market, which we thought was missing. Today, we're 42 people, our experienced team of controllers and recruiters, really focused on helping our clients improve cash flow, increase profitability, increase value. 80% of our work effort might be on producing financial statements and reporting, but 20% of all of our values are the last 20%, in which we help them improve profitability and cash flow.
Awesome. Thank you, Alan, for that introduction. I'm going to now toss it over to Nathan.
Hey, everyone. This is Nathan Chandrasekaran. Hopefully you can hear me on the road. Real quick, started my career in Wall Street on finance at Merrill Lynch investment banking, then spent over 12 years at a larger private equity firm called TZP Group, and then started my own investment firm about 3.5 years ago, based in Seattle. And we spend most of our time on what we call investing in the fiction levels of technology. Pretty excited to be here today and talk about what PE firms are looking for when they make investments and what's required post-closing from a financial reporting perspective. And it's been great to partner with BSP and Turning Point over the last couple of years.
Excellent. Thank you, Nathan. All right, now I'm going to throw it over to David Smooha.
Thanks, Greg. I've been involved in helping companies implement ERP and really finance automation system for close to 30 years now. Started my career at Deloitte, CPA. After a number of years having just one of the sole computers in the office in front of my desk, I got asked to build a consulting team and started building on the lines of under the Deloitte umbrella, and then eventually took that business and brought it here. We've been always at the cutting edge of technology, involved with fresh Windows-based systems some years back, and dating myself here, and then cloud-based systems More recently, really, most everything we do today is all cloud-based, help companies streamline their business operations. I don't think there's one company we've worked with where we haven't cut the amount of effort and time to get their financials out in a quick and reasonable timetable, and been able to streamline the processes they work with. Thank you very much for everybody for joining.
Yeah, awesome. All right, well, let's get out of the way and start the discussion between you gentlemen here. So I'll just ask some questions, and I have some spun up, and maybe we'll get some questions from the audience, but let's dive in. All right, so my first question is for Nathan. Nathan, as a founding partner of CRP, you specialize in private equity investments. Can you provide some insights into the key factors that you consider when evaluating potential investments in their Confluent Technology Solutions? And I'll further that by asking, what specific KPIs or metrics are really guiding your decision making?
Great question, Craig. And it's interesting. We probably look at 500 businesses a year that are looking to do some sort of transaction. Most of them are founder-owned businesses looking to have a liquidity event, looking to take some money, put it in their bank accounts. Sometimes they're looking for a partner to grow. There's lots of reasons. And often, most of these businesses are, sub 50 million revenue, sub 10 million cash flow a year. And just the first thing we ask them for is P&Ls. Can you give us P&Ls? Often we'll get them on a cash basis versus accrual basis, but we're looking for, how quickly can they send us reporting in terms of the general P&L, balance sheet, cash flow? Is it cash or accrual? So that's call it the standard P&L, typical financial statements analysis, where you get your revenue, your COGS, your SG&A. And the second piece we follow up with is, hey, what are your KPIs? Like, what are you using to measure the performance of your business? Is it utilization of employees? Is it turnover of inventory? And often a lot of these guys don't. Sometimes they do. Sometimes they have it on a napkin. Some are very professionalized, but it's across the gamut. So when we look at these companies, we try to assess, and the third thing we ask is, what is your team infrastructure? Is it someone in the family running the finances? Is it the CEO himself doing the financials? And we try to assess all three categories to figure out. That's part of the equation when we're assessing the strength of a company's organization, both in terms of the value prop of the business and how strong their financials and the financial team is.
Let me ask you a little side question on that topic. You say you see almost 500 deals a year. How many business owners are prepared when they come to you versus they have a lot of work to do to get where they need to be so that they can create a compelling argument for the sale of their business?
I'd say 80% are not prepared. And that's where we have firms like Turning Point help us out. They'll come in and help prepare those financials. And the reason why we need those financials on a cash and an accrual basis is often when we're buying a company, we are offered borrowing money from a lender. And that lender will typically require accrued financials or reviewed financials or even audited financials. Most of these companies aren't audited, but I'd argue a majority are not ready, and a majority are still on QuickBooks. And there's nothing wrong with QuickBooks, but as we scale and want to grow the business double, triple in size, you typically need a more advanced system like a NetSuite or a Sage or somebody. But on top of that, you need someone at the organization that can actually run a NetSuite, run a Sage, run the implementation, and run that ERP software system. So, Craig, to your point, a majority are not. Sometimes they'll hire an advisor, like an investment banker, but they're really only in there for the interim for a few months. They're not really helping set up the long-term infrastructure of the company for success.
Excellent. That makes a lot of sense. So you touched on a lot of, technology as a key to providing those details. So I guess I'm going to pass it over to David for this next question. David, with your extensive experience in technical systems and financial processes, how does data integration and accurate financial reporting impact the due diligence process in the private equity landscape? And could you possibly share any instances where a solid data framework led to a more informed investment decision?
Sure, thank you, Greg. So I think the quality of the data that comes out of a business system actually is really critical for companies that are looking for potentially an investment, like a CRP or someone coming to them for an investment. I think as Nathan just pointed out, when when you're able to present a set of financial statements on an accrual basis with lots of good supporting documentation, information about your customers and your vendors, your team, readily and quickly, that just goes to show the quality of the organization you have, the data, the quality of the data, and present itself extremely well in front of an organization like CRP. What's uniquely interesting and great about NetSuite, and give a little bit of a sale here for NetSuite, is it's already comes pre-set up in a format that already provides a lot of key indicators for organizations depending on the industry. So when you buy NetSuite, you usually buy it based upon the industry that you're working in, and that solution allows for KPIs that are relevant in the industry. So if you're a distributor, how long is it taking to get an order out the door? How long is it taking to receive an order? Which vendors are late? Which customers are paying on time? And a variety of other types of metrics that you could use as a distributor, or in of course other business models as well, that will help you manage your business. When you buy NetSuite and you buy the solution, you're also getting all of those key performance indicators that are going to give you those results. All the more reason to be able to better present to manage your business, because I think that's critical to after you implement a solution like NetSuite, you really should take advantage of it. So you can manage your business better, but also that you can also then present those metrics to your advisors.
Yeah, excellent. So, David, you point out, some interesting things about preparedness and providing the right metrics. One thing that stands out to me is a lot of times we're focused on financial metrics, but a lot of the things that you just mentioned are sort of operational metrics, right? Are both critical to investment decisions?
Absolutely. So what drives the financial metrics are their operational metrics. So if an organization manages to get orders out the door quickly, they're also going to be performing better. Customers are going to be more willing to work with that customer. The financials that ultimately reflect that in the organization. It also reflects very much on the team being able to see that information, readily act upon it, and be proactive in the way they work with customers. It's all about customer service today, and there are many businesses that are competing. Almost every business has a competitor in it. So it's all about how you service your customer today, and if you can service that customer better, then it's going to show in your financials as well.
Excellent. Let's turn to Alan. Sorry, I just got caught up. I turned to Alan from Turning Point. Always catches me. So Alan, Turning Point offers financial advisory services and talent placement. In your role, you've likely seen the impact of executive level talent on financial and operational performance. From a metrics perspective, what are the correlations you've observed between the quality of the leadership team and the success of private equity investments?
Well, it's kind of a self-answering question, right? The better your leaders, the better performance of the company. But what I'd say we look for is a leadership at our clients that has a framework for driving the business forward. And that framework wraps in simply, what do they do today? It's what do they aspire to be tomorrow? Mission, vision, values around how they treat each other, how they treat their customers, wrapped around objectives and strategies to achieve those objectives that are measurable, and that they're broken down weekly, monthly, quarterly, annually, and distributed through KPIs to the management team, to leadership team, and to the people below them. So if you have a leadership team that has a framework for driving the business forward and knows how to create measurable outcomes, not just we're going to improve sales, or we're going to reduce cost of goods sold, or I want to know how do we measure improved? You can't, right? We want to know exactly what those measurements are, if they hit them or not, and with a functioning ERP system that has the data matching across the platforms, we can connect these dots and produce financial information on a phone. Why do I need to be so stressed about a 3-day or a 5-day close when I can run my business right here? So metrics to make decisions in real time, pushed forward through a framework for leadership, is what makes private equity companies have successful outcomes.
Excellent, excellent. In the CFO role, what are some of the challenges that CFOs face when, getting involved in equity investments and, making that entry into the marketplace so that they can, court that equity investment? Like what are some of the roadblocks that they stumble upon?
Well, what Nathan said is true, right? A lot of companies under 20 million or 30 million sales say they're on GAAP, but they're effectively, a tax basis or a modified GAAP. And so the first thing is we have to get them truly in GAAP. We're matching revenue expense. We're following revenue recognition. We're now following the new lease rules, lease accounting rules. So the one is, are our financials truly reflecting the business of how the business is functioning? That's a hurdle. The next hurdle is moving away from waiting for the financials 2 to 3 weeks after month close to get information. We want to get those KPIs that drive the business in our laptops and our phones every day. And the third one is private equity, rightly so, ask for more information than the business owner needed to run the business before, or maybe they needed it, but they didn't get it, right? And so then improving their financial reporting package and their non-debit and credit reporting, like a sales order isn't a debit or credit, but I want to know baked in margin looking forward. I want to know purchase orders. What are we on the hook to buy? When's it coming in? So putting all that information together to support the information needs the private equity, like Columbia River Partners, is probably the last hurdle to come through.
It sounds like it's not only that 30,000 foot kind of dashboard perspective you need, but you need the capability to drill down into the numbers and really see what's informing that data, right?
Yeah, one of the things we talk a lot about, let's go below debits and credits, because by the time it's a debits and credit, it's too late, right? And everything in a business starts somewhere before it hits the general ledger. So getting into the details and understanding how those non-debits and credits information lead to financial results, like you're talking about operational, financials are a dependent variable on how the operations functions. Getting into those operational things at a detailed level allows us to predict how the financials are going to come out. We should close our books and confirm what we already know, not waiting on pins and needles to see how much, what revenue and gross margin was at the end of the month.
Always nice to confirm, your hypothesis as opposed to scrambling to kind of create the hypothesis at the last minute, right?
Yeah.
Awesome. Let's go back to Nathan. Nathan, you're our resident investor here, so you've probably got the best handle on all of this from the perspective of the PE firm itself. So can you elaborate a little bit on how you align operational and financial KPIs within portfolio companies to drive that value creation?
Yeah, just one thing I want to add is most PE firms, when they make an investment, they'll go through a process of quality of earnings. And what we do is, and I want to talk about that for 2 seconds, then we'll jump to your question. And quality of earnings, if you're not aware of that, is when a PE firm comes in and says they're going to put in X amount of capital into a business, we will hire a third-party accounting firm to do what they call a quality of earnings. It's not an audit per se, but they're basically going to spend 4 weeks to 6 weeks diving into a company's financials, diving in their systems. They'll produce a report that says, here is the quality of the earnings, here's the revenue and earnings streams. And a lot of companies, and I say this, a lot of companies are not prepared for that. And that's where a firm like, because they're still on QuickBooks, or they haven't put in the monthly financial packages, they've never gone through an audit themselves. Firms like BSP and Turning Point can help. Turning Point from the professional resources side and BSP from the financial system side. Post do quality of earnings during the due diligence process. We then we close the deal. First 100 days, we sit down with the finance team and talk about what are the reporting requirements going forward. Before you had just the owner, typically. Now you've got the owner, the CEO. We may or may not have expanded the management team. You've got maybe a lender or two, right? There's not typically a lender involved, and they'll have monthly borrowing bases, quarterly covenants, end of year cash flow statements, and then you have the investors. And we typically have a monthly financial package and a quarterly board package. And often when when you put in private equity, which comes with both debt and equity, the lenders usually require an audit, which is also very new. So it is a meaningful step up in terms of reporting requirements when you take on a private equity firm. Obviously, it's all to the benefit of hopefully the company to be ready for the next turn of events. But that's sort of wanted to give you that preview if that was helpful, Craig.
Yeah, I mean, I guess one of the takeaways here is that if you're going to get into the private equity world, be prepared to be audited, right? Excellent.
Yes, not during your diligence process, but the first year after close, you're
Yeah.
likely going to be audited. Correct.
And
It's going to be a requirement.
I would add a quality of earnings may not always go back to source documents like an audit would, but it also covers a lot more than an audit would, right? Audits making sure your debits and credits, your general ledger is supported by by the transaction documents and contracts, but a quality of earnings is even deeper because it goes across more than just your general ledger.
Excellent.
And then Craig, to your question, post-closing operational, the PE firm, most PE firms, we do not want to be in the day-to-day business of running a business, right? Our goal is to work with the CEO and the management team, the strategic direction. How do we grow? Whether it's more management, more acquisition, more growth capital. But what we expect every month is a report, right? A monthly report that gives us both the operational KPIs and the traditional P&L statements. And back to Alan's point, they should tie hand in hand. If your KPIs are in the right direction, your P&L should be in the right direction. If your P&L is in the wrong direction, well, let's go look at the KPIs and figure out why we're in the wrong direction. Is it because our average sale per employee dropped 50% this quarter, or we couldn't collect from 3 of our customers, or our DSOs are up significantly? So we will get more granular post closing, and often one of the areas that we see in most of our investments is we typically have to go through an ERP implementation. Our preference at Columbia River is NetSuite because we have it at multiple of our companies, but we have others too. And then often we will try to bring a resource in-house that's got that experience, or we will turn to a Turning Point to help us staff it up, right, depending on what their bandwidth is. And we'll use it from like BSP to do the implementation. And you guys are actually helping us with 2 of our companies right now.
Excellent. All right, David, we haven't heard from you in a minute. So back in January, Business Solution Partners took on a round of investment with CRP at the helm. And this kind of highlights, for me at least, the importance of financial processes in M&A scenarios. Can you shed some light on the role of financial data accuracy and the integration of content from different organizations into a merged or acquired organization? How does technology like NetSuite ease this process of combining 2 organizations and providing clear and transparent financials for the management team?
Yeah, so I mean, NetSuite's a full-blown ERP, allows for companies to be able to run any type of business or most any type of business in the system. So when you run NetSuite, you can consolidate multiple businesses, multiple business units under the single umbrella. You can run financial, run the operations, metrics of the organization within the solution set. What we find is companies that come into the process of using NetSuite, many are actually trying to get prepared in advance of a possible transaction, and so they're very so in the process of migrating over to a solution like NetSuite. People are also cleaning up their data, getting their data, and making sure the data is accurate, making sure that their business processes are the way they want them to run for their business, and able to grow with the application as well. So over time, you may enable the features and functions of NetSuite to enhance and replace your QuickBooks system, but over time you may do many other things with that application. One of the things that we're doing at BSP is we're expecting to be onboarding a lot of new employees in the coming year. We've built an entire onboarding system within our NetSuite system, so that when it comes time to recruit new individuals into the organization, or maybe potentially bring in an acquisition as part of that, being able to simply some of their basic contact information in NetSuite, triggers off many workflows within our organization to now deploy the business applications that they need to run, like running NetSuite or HubSpot or our adaptive systems, getting them onboarded onto email and other business applications, getting them set up in our payroll and HR systems so that we can track their information. Putting that kind of, having now that at our fingertips, we're able to quickly onboard many employees without too much difficulty. And so we're at BSP, we're very much preparing for the next set of what's going to happen in our organization, and it's going to be some quite a bit of growth we expect as a result of the recent investment, and we will be able to manage and run that growth through our systems rather well.
It kind of sounds to me like at this critical phase, let's say first 100 days, or at the beginning of a new relationship, that systems and processes are the focus, right? Improving systems and processes so that we can increase the speed at which, or decrease the time to reporting, right? Increase the speed of close so that we can concentrate on analysis as opposed to administrative work, right? Does anybody want to speak to kind of that transition period and the flurry of activity that takes place with organizations during those first 100 days of transformation, let's say?
Yeah, I'll take that. Look, on those 100-day plans that most PE firms, and just for everyone's benefit, what happens is if a PE firm makes an investment, they go through a 60 to 90 diligence process, you close the deal, then after the deal closes, you all shake hands, high five, have a nice dinner, and then the real work begins. And we call that our 100-day plan post-closing. And there, we're usually sitting with the founder, the management team, assessing all the different functions of the business. And we're sharing our diligence. What do we learn? Like, where do we see good things and bad things? And in the finance section, we typically talk about the current system in place, the current team in place, the requirements. Look, let's be honest. PE guys, we don't want to be operators, right? We don't want to be involved in making the decision of what ERP system and all this stuff. What we want to do is work with the CEO and the CFO and figure out, do you have what you need to deliver what the PE firms want, which is really monthly reporting and growth in the business, right? That's kind of all we care about. So we kind of work from there. And part of the 100-day plan is to go through all those different work streams to get to a point where we can have that. And look, most PE firms are lazy. We don't want to get involved in these day-to-day decision making. Like our goal, our hope is you make an investment and everything's ready, done already. Like here's your monthly package, here's our growth plan, and we just have to show up once a quarter. That's usually never the case, but that's where we come in to help. And really, we start with the people and the people and the systems. So I go back to, if you're on QuickBooks, you close the deal. Well, can we implement NetSuite? You have someone internally to run it. One of our portfolio companies that we just bought, we bought about 9 months ago. They do manufacturing of fiber optic cable. We're on QuickBooks, big inventory systems. We realized we need to move to a more advanced system. The management team chose NetSuite. And then when I challenged them, do you have someone to actually help manage the implementation of NetSuite from the company side? They did not. So we turned to firms like Turning Point and BSP to help us find someone to be the day-to-day person there. And then they can decide, they can help manage the implementation of NetSuite using whatever provider they want to use. They're using BSP in this case to implement a NetSuite to further meet the needs of the business as it continues to grow. So in that case, my goal is only to make sure, do they have the right resource to run the implementation of NetSuite? But I'm letting that person decide the implementation, who the partner is, and they know what I want as the PE firm is. I want to get a monthly package. It's pretty clean. It's pretty accurate. It gives me my KPIs. So I don't want to really design those. And I want that person, that CFO or controller, to be held accountable for that. So hopefully that makes sense, Greg.
Yeah, it touched on something that I have been thinking about lately and developing content around, and just a topic, which is technology as a talent magnet, right? it's not just that you have a CFO who's competent, but you have to have a CFO that's competent and prepared to implement business systems and prepared to understand, beyond QuickBooks, how ERP fits into the big picture, right? So, Alan, I would think that a lot of uh, the talent that you work with invests in their own education around systems like ERP and fintech, and really want to gain expertise so that they have utility, in organizations where that application like NetSuite is the core of their financial systems, right?
Yeah, they have to be learning individuals. That isn't always the case when you come into a business that's got a CFO who was, the controller for years, and now the CFO. They tend to sometimes protect territory, but you're looking for an learning individual, and you're also looking for somebody with the confidence to reach out of the organization and bring in experts. I think it's difficult to, when you're in a business and you've been there for 6 years and you're closing the books and you're working with a management team, to then say, okay, we need to change ERP systems, and here's what's possible, right? Because that world is evolving, as David would know, pretty quickly right now, right? And so we can't just Google on, what can ERP do for me and become an expert. So I think the two things we'd be looking for is learning individual and confidence to reach out to experts to help formulate a plan to use a new technology to move the business forward.
That talking point kind of pushes me back to a question that I had to Nathan, which said, technology is rapidly evolving, right? So how do you navigate the challenge of integrating new technologies into existing portfolio companies and kind of stay on the cutting edge of, what systems are the best systems and the right systems for these businesses?
It's a great question, and I don't think we have a great answer. So my partner, Puneet, so I come from the private equity world. I'm the last guy you want to be asking about what are the latest technologies that you're putting into a company, right? Like, that's not my, I'll be very transparent. My partner, Puneet, has a lot more experience. He comes from the operating technology world. Even to be fair to him, he doesn't always have the answers. And the one thing that we have seen is sometimes companies implement too much technology, too many softwares that they're not properly using. As an example, we bought a company, another company that was paying for Salesforce, but when we find out they're still using Excel for CRM, right? So like for their pipeline, so we moved them from Salesforce to Pipedrive, as an example. I will say one thing that we are pushing is to make sure that when we implement other technology systems, right, we want them to the extent they can be integrated with your ERP system, right? If you're going to implement a budgeting system like Adaptive or a CRM like HubSpot or Pipedrive, can they integrate into NetSuite seamlessly, and can the data? So we do want to minimize the input of data as much as possible, and ideally, and we'd love it for it to be integrated into your ERP system. So when we get our financial package, we're not just getting the core P&L statements, we're getting the KPIs, we're getting the pipeline, we're getting the closing ratios. We'd love to see all that streamlined. So that's one thing we're doing, is just making sure the systems are integrated to the extent they can be. The other piece, which I'm assuming you're going to go into, is what's the role of AI and how does that play into all this? We're still in early stages trying to figure that out. We've tried different demos for helping analyze data, for inputting data, tracking, inputting, fields into CRM. Again, I'm not the expert here, but I know we're looking at different applications and how can that help both on the ERP financial system side as well as other applications like CRM or HR, et cetera.
Exactly. ChatGPT helped write some of the content on today's webinar, so I'm right there with you. It's right on the bleeding edge, and it's very difficult to kind of keep your finger on the pulse. But I think that's the challenge that we're all facing, right? We've got to stay current as the world marches forward. Even though we're busy doing a million other things to get our businesses running, we still have to pursue that continuing education, which I think is one of the reasons why a lot of people are here today on our call. So I'm going off script here a little bit. One thing we promised our audience today was kind of a definition of some of these KPIs. I know that EBITDA is something that we're constantly focused on post investment, and I would like to just throw out to the panel, I understand that different types of businesses and different business lines are going to have different KPIs, but I'm sure there's a kind of a standard set of KPIs, and then you kind of get into your specialized KPIs based on your industry or vertical or business activity. Can we just kind of help the audience understand some of the most important metrics that are being examined in these, monthly and quarterly reports?
Yeah, and I guess it's Nathan. I'll start with that, and Alan and David, please chime in. To me, we look at the quality of your revenue. I'll just go down. It's quality of your revenue. What is one time in nature? What is recurring in nature? Right. Then we look at the profitability of that revenue from a gross margin perspective. Right. Those are the direct costs to deliver that revenue. And then we look at sort of EBITDA. And EBITDA is not an accounting term, right? It's a made up term by Wall Street, but it's the best proxy of the operating performance of a business, right? And if you think about what EBITDA is, we try to ignore taxes, we try to ignore interest expense, we try to ignore anything tied to the capital structure of the business. It's revenue minus your cost of goods sold minus your SG&A to run the business. And that's what EBITDA is. And that's sort of the metric that across private equity firms, venture capital firms, that's the measure they tend to look at, is what is the EBITDA of the business and what is the EBITDA margin, right? If you're sub 5%, that means you're a very thin margin business. If you're over 20%, you have a really good EBITDA margin business. And that's really on the P&L side. And then the other key metric that we look at is the EBITDA to free cash flow conversion. If you generate 10 million of EBITDA, which is great, but you only generate 2 million of cash flow, well, where is that other $8 million going? Is it in working capital? Is it in CapEx? Is it in something else? So quality of the revenue, the margin of the revenue, the EBITDA, which by default includes how much overhead you had, and then the EBITDA to free cash flow, which helps provide an additional indication on your working capital and your CapEx. That's sort of the key things that we look at when we look at every company. And then we think about, pipeline going forward, backlog, conversion, that's another separate aspect. But those are sort of the two main areas that we think about.
Excellent.
I think
I'll just open up to Alan and David also for this question.
Okay. I think Nathan captured it. I would add, after EBITDA, we look at the efficiency of your capital. So we look at DSO, how fast are you turning over your sales through AR, DPO, how fast, are you able to pull cash in fast from customers and slow down payments to vendors. We look at inventory turns. We want to see that, moving from turning to spinning. So from 3 or 4 turns a year to 12 turns a year or more. And then we look at debt service and leverage. So we would look at, debt to equity or total debt service, like a debt service coverage formula. So that can capture, your EBITDA captures your operating efficiency, and then DSO, DPO, debt service, and inventory turns capture your working capital and cash flow efficiency.
Excellent. David, anything to add there?
I might add, it's probably not just financial KPIs, but there are a lot of non-financial KPIs that you might want to pay attention to. So just the efficiency of your labor force, or what is is your labor force constantly leaving and hiring? Are you hiring new people, or is there continuity in your labor force? Those types of things can make a difference as well. So it could be there's a lot of non-financial KPIs that also should be analyzed, and maybe not so important to private equity at the surface, but ultimately it really has a big effect on how your business runs.
Thank you. David, sticking with you, BSP provides financial solutions, operational solutions, fintech, ERP, a whole kind of wide variety of consulting services and development services. One of the things that we kind of consistently talk to clientele about is a unified data source, transparency of the data, sometimes referred to as like a single neck to choke, right? That there's one system to rule them all, if we want to go with the Lord of the Rings reference there. Can you talk a little bit about how important data transparency and visibility into your day-to-day operations is, and how you can achieve that through technology?
Yeah, so I think what we find is when companies have more than one system with the same data in it. So maybe you have a CRM, which may have your order management information, customer information, and then you may duplicate that in your ERP. When you have that when you have those systems and the data is duplicated, you're often finding yourself, there's no real one source of truth, and you have to figure out which is the right source of truth. And so in the design and deployment of the way we build these systems, and when we do integration with those systems, we often try to identify one of the systems as the master system. And that master system is the system that really is the application that's the owner of certain types of data. So where there may be Salesforce might be your customer master, your order master, your those types of things, and then NetSuite handles all of your financial data. So you have a good the NetSuite owns only the financial type data. So billings and fulfillment and subscription renewals, etc., all kept in one application like NetSuite. When we find that the data is needing to cross the platform and exist in both platforms, very hard to keep those data elements in sync. And we try to stay away from those types of situations and try to find a way to make sure that there's one single system that's the owner of the data.
And Nathan kind of alluded to that before, and when he talked about kind of the importance of integrated systems, right? That it is possible to have these two different systems have similar data, but we can align those systems automatically through API processes, right? So that there is still one single source of truth, but that single source of truth data is now being ported out to your other applications, and it's being all controlled in one place. So if you make changes in one place, it happens in the other place and vice versa, right?
Mm-hmm. Exactly.
All right. Alan, I want to focus in on kind of the talent placement side of your business, because I think it's a hugely important, role that you're filling in the private equity ecosystem by, aligning yourself with people that have systems and process expertise and introducing them to companies that require those skills, right? So can you talk to me a little bit about how you assess the alignment of a company's executive team with its goals during the due diligence process, and maybe highlight an instance where this alignment influenced some of those investment decisions?
If I go back to what I said on the first question, which was we're looking for executives with a framework. Where are we headed? What are we doing? Where are we headed? And how do we treat each other and our customers, aligned with objectives and strategies that are broken into measurable KPIs or deliverables weekly, monthly, quarterly, annually. So during the due diligence process, if you come into a management team that is structured with measurement systems against those deliverables that aren't their day job, they're the things they need to do to make the company better for tomorrow, I think you get great alignment. And by the way, you're going to have a better running company. So when we look for talent for our clients and private equity or any of our clients, we're looking for executive level talent that has a framework. It can be one of many frameworks. It'll be one they made up, but the framework has to cover those essential elements. What are we doing? Where are we headed? How do we do it? And how do we set goals and objectives to achieve those goals in a measurable fashion and measure them and hold people accountable? You can't do that without some level of functioning ERP system. We recently went into a company that said our numbers aren't right. And so we started looking at it. They had another advisor in there and they had 14 data warehouses. We said, well, wait a minute, we're not going to touch that, right? Unless you allow us to consolidate into one, maybe two data warehouses. But you can't have 14 data warehouses. You spend your whole time reconciling them. And then an example, we went into a company just recently out of Portland, a pretty big company. They manufacture lotions and skin products, and their cost of goods sold was beginning inventory plus purchases less what we count on the shelf equals cost of goods sold, right? And so equals what they used. And so they have all these 15 levels of revenue and one level of cost of goods sold outside of labor. And so there's no way. And when we got done analyzing that, we took about 40% of the sales out, and they went from losing money to profitable. Right. So that's a place where data and a functioning MRP, ERP system aligned to know what their products are aligning with what revenue, similar to what Nathan said earlier, right? Are we making money on every revenue dollar that we sell? And the answer for them was no, they're losing a lot of money on big customers, right? They get excited because they got a new, $4 million a year customer, but they didn't realize that, after 2 years, because of cost escalation during the last couple of years, they were losing money on that customer, and they had to fire the customer.
Incredible. Staying on top of the numbers is just a vital process, right?
Yeah.
I'm going to take a pause here for a second. We're getting into our last 10 minutes of our session, and remind our audience that the Q&A interface in Zoom webinar is open. I have a couple of more questions for our panelists, but I would really like to hear from you. If you have any questions for our elite team that is gathered here today, I'm sure they would be happy to field them. So find that Q&A interface, type your questions in, and we'll be sure to lob them over to our panel. All right. Let me pick a juicy question here as we close out our session. So Nathan, as the resident expert on the PE side, I'm going to throw this back to you one more time. The convergence of technology and finance is shaping various industries, right? This is a very transformative time for business. And one thing that I think is taking the lead is analytics, right? The evolving capabilities of analytics. How do you think the evolving capabilities of analytics will impact investment strategies and the decision-making process going forward?
Good question. I think what's going to happen is every business has their own unique KPIs and how they measure their performance. I'd say half the time when we meet a company, they know what the KPI should be. The other time, they're in that discovery phase, or they're, a lot of guys just look at their cash balance, which there's nothing wrong with that. Like, hey, am I making more or less cash this week? And that's how they measure it. I think with the advent of more technology, I think and I think Alan talked about this earlier, is we'll see KPIs faster. So in theory, the faster we can KPIs, the faster we can course correct if something's going wrong, right? If that revenue is not profitable, or, hey, this project is really got a really poor margin on it, maybe you can't course correct it immediately, but we'll at least have the headwinds that, hey, we can go talk to our lender the next 3 months. We're gonna have a challenge because this one assignment we did is really unprofitable. So I think at the moment it'll help us look further into the business more quickly, more efficiently, and hopefully we'll get ahead of problems. And hopefully it'll also give us a sense of, we should be doing more of X, Y, Z because it is more profitable. Right? We should be doing, maybe the smaller projects are actually, more profitable. They're faster to turn. Again, I think the technology would help us get KPIs faster to make decision making hopefully better.
Yeah, it makes a lot of sense. Today we've kind of focused our conversation more on the past, right? ERP helps you understand where you've been, right? But there's a whole world of technology today around FP&A, planning and budgeting, which is kind of that financial crystal ball, right? Trying to tell you where you're going and the levers that you can pull to steer that ship in the right direction, right? David, would you talk a little bit about that forward-looking financial capabilities with a product like a Workday Adaptive Planning, let's say?
So, what we find from our clients that really have their act together, or really are focused on building their business, they're very much, as much as they're interested in looking at historical data, they're very much focused on the forecasting data. And so so much so that they don't only have the CFO building a forecast in a vacuum and running those forecasts on his own, but instead they make it a very collaborative effort across the whole organization. So individuals, like each department head, just maybe provided a template, and that template is a blank template, and they're asked to complete that template for their department. Sales team is provided with a sales template of what are they going to sell, What are the teams members they're going to need to sell that? What's the success of those sales, of each of those opportunities they're taking? So how many opportunities do they have to work on in order to be able to sell the amount that they're going to sell? They pass some market information, and they pass marketing budgets to the marketing team, where they're assigned responsibilities to, what are the different marketing campaigns and events that they're going to have? What are the anticipated results of those campaigns? And how much is that going to translate into new business? And we can go on with each of the other department heads within the organization. And that actually makes transforms the organization in such a way that now the individuals can actually be measured against the forecast that they put together. And so they're the ones providing the input as to what the forecast is going to include. And they're also monitoring the results of their forecast on a month-to-month basis based upon what they've accomplished month to month. And the business can then start tweaking the forecast and tweaking the business based upon what they find from day to day in that process. The most successful organizations that we've worked with do an incredible job of forecasting. They do what I've just described. They put the responsibility on the shoulders of each of the department heads and maybe even some of the employees, and then they pull that data together. And it's really the finance team's responsibility ultimately to pull that data together and produce a forecast that has actually some substance behind it from the management team, and includes the sum total of what the organization is going to be doing as a consolidated organization. And all of that, of course, is driven by the goals of the organization and the direction of the organization up at top. It helps really also align all those goals early in the year so that everybody's going after the same thing. Here at BSP, we're very focused on working with a number of different vertical solutions and vertical businesses. And so each department and each individual in the organization is responsible for how they're going to contribute to each of those vertical systems that we're building and that we're selling. And as a result of that, when we're done and we produce financial information, the team members can see, how many leads did we close, how many leads were produced in a particular area, how many deals closed as a result of that, and then on top of that, how much effort did it take to build a certain feature or function in the solution, how many customers bought into that solution and feature, all part of the overall financial budget and forecast that we put together.
All right, thank you for that. So we did get a question from the audience. I want to make sure we squeeze that in, even though we're in our last minute. But before we do that, I just wanted to give some additional contact information. Anthony Meshnik is joining us on the call. He's our private equity account executive. If you have any questions about any of the content that you saw today, if you want to get in touch with any of the individuals on the panel, please feel free to work through Anthony. He'll put you in touch with any of our team members who are on the panel today, help you with any inquiries or questions you might have about products and services that are offered by our organizations. And now I just want to get back to that final question from the audience. Thank you, Kenneth, for your patience today. Kenneth asks, what kind of technologies and platforms are being used to visualize and monitor KPIs? And specifically, is anybody doing anomaly detection reports on their data? And how useful is that? I guess, David, I'll kind of throw that to you because that's a tech-focused question, and then I can open it up to anybody else.
Yeah, so there's a number of tools, including Workday Adaptive, which is one of the tools that we work with, but there's a number of other tools that people are using in the marketplace that allow for reporting of these types of things, like Power BI and other business intelligence tools that help with a company like that. And probably haven't heard the term that you used before, but I usually use the term exception reporting. So, a very big part of what companies do today is, instead of just simply reporting the results, what we like to do is report exceptions. So what were the anomalies in the data that we are looking at, and get that to management so they can react to that quickly and readily. So, looking for things that you expect to happen in the business, and if they're not happening, making sure that we report on those so that we're paying some attention to the business.
Well, gentlemen, I could speak to you all for many more hours. I have a million more questions. Let's do this again sometime in the near future. I want to thank Alan, Nathan, and David for their time today. This was a very valuable panel. And just a reminder to our audience, be on the lookout for an email from us in the coming days with a copy of the PDF deck and a copy or a link to the recording on YouTube. We want to thank you once again for your time today, and we look forward to hearing from you. Again, any inquiries that you may have, please feel free to reach out to Anthony, and I'll also just put up our email addresses for our panelists today one last time. On behalf of BSP, I'd like to thank my panelists and for everybody who attended today, and we'll see you next time.
Thank you.
Thank you.